Volatility is just starting to spike back up, and it's happening exactly when the data says that it should. But will history continue to repeat? Hello, ladies and gentlemen, and welcome back to the Daily Show. We discuss stocks, commodities, and cryptos together. The S&P 500 has just experienced 2 brutal days of selling, and it's entered into the area that we call TP number 1. Yes, bears will be happy, but is there worse still coming? Well, even though the bulls may rally this market through, we know that if this level is broken, there are key levels that we need to discuss today that could be on the horizon. That, along with the fear of the unknown in yields breaking to new highs, semiconductors getting absolutely smashed, the best sector in the markets, and everybody's favorite stock, Nvidia, coming down to a key level of demand, could spell some real problems. So let's look at the history together right now. Well, welcome back everybody to the Daily Show, where we discuss markets around the world, including the macro, lead indicators, and of course the hottest charts. It's been a while since we've seen such a massive red sell-off day. Amazon, Tesla, Google, just to name a few, were down, but really the interesting factor was semiconductors. We spoke about AMD late last week and talked about how it was possibly the Canary, showing us that markets were going to continue to weaken. But I shared over on Twitter or X basically another indicator that showed us a lot about how we thought this recent rally was a dead cat bounce, a false rally. Well, it turns out the bullish percent index came through once again, and we just started to enter into possible capitulation. If you take a look at the last time this happened, of course, it was really brutal, but what bulls will be looking for is a massive turnaround in this particular indicator, along with some other signs that we'll look at later on today. But what does the data tell us? Well, we've talked about the back end of September a few times. The second half of September usually is negative. In fact, in similar situations over the past 50 years, we do tend to have a whole bunch of negative correlations, especially over the last 10 plus reads. And we know that that leads into the worst period of time of September, which tends to be the end of the month. But can things get better? Well, luckily for the bulls, yes, in pre-election years, it does tend to get better. And in fact, the September-December run has a very good track record history when we have strong positive years. So when we have those 10% gains plus from January all the way through to August, which we did in 2023, the stats are very positive for bulls into the end of the year. So should we be looking for a buy the dip scenario? Well, let's take a look at some unusual volumes coming through over the last 24 hours, and then we'll get into the charts together. First up, S&P 500 did get a little bit of a print, 43, 30 kind of area. No surprises why we would get that. It's exactly the zone we expected some kind of defense to come in. And of course, Treasuries also breaking to new lows. Congratulations to all you guys. You were very much on this one. We knew that Treasuries would probably break to a new low, and it's finally done it. Let's jump on and over to the options world. While there was tons of options volume going through, 42 million compared to the normal 40, 49% were calls, 51% puts. Now, generally speaking, we usually see a lot more calls coming. A lot more puts when the markets sell off this brutally. There were a whole bunch of big 90-day average volumes, but they were all through those major stocks you expect them to be in. What about rotation? Well, the defensive sectors were doing better. Some healthcare stocks were up, nice. In fact, one of the ones we thought would go up was good. And utilities also was holding okay with staples, but it was all about real REITs, consumer discretionary, metals as well, semiconductors. It was just a sell-off of everything. And the last 5 days have now shown that semis is almost the worst sector in the market, down 7%. Who would have thought the best sector would become the worst sector so quickly? Let's now move over to whether this market has bottomed. And we start off here with the charts, a percentage of stocks above 200-day moving average. That's getting down to 38%. Above the 50 is where it gets interesting though. 22% of stocks above the 50. And we know that we're now entering into that March dip territory in terms of what we saw during that sell-off. Could it get worse? Of course, the answer is yes. But if it keeps going and we start to get into that hugely extended area, such as what we saw in previous sell-offs in 2022, like a 13 read, we've got to be paying a lot of attention to the dip buying in those areas. What about yields? Well, I think the most interesting thing about yields is not only are we in the fear of the unknown, 20-year, 30-year, 10-year, and 2-year, all in new highs, which is, of course, very negative for markets. But we're also seeing US 2 versus 10 continuing to decline, which is showing us that we're getting closer to uninversion, which basically means a recession. Usually speaking, when you get underneath 1, that's when you're going to get that recession call coming out of the US. Not before, historically, but around that period. What really happened after Jerome Powell's speech, and I don't really know if Jerome Powell's speech was that important or that crazy really in terms of what was happening. I think it was more the market was just pricing in exactly what it's been doing now for a month. Higher for longer. Here we've got a pushed out indicator. I think this is September of 2024. And you can see here that during the month of August all the way through to September, what has happened? Well, the market has been pricing in a massive shift. We've been going from 4.5% expectation, so rate cuts effectively, to 0 rate cuts, if not only one over that period of time. So the market's saying higher for longer and longer and longer and longer, and it's starting to freak out a little bit about that. For VIX traders, the VVIX spiked, which we always talk about, but the VIX itself, 17.54, a big read here on the VIX, certainly one to be watching. If that gets above 20, then we're in a fearful market, and that's when you start to see that capitulation, that really strong waterfall style selling coming through. Treasuries are important, $90. A big sell-off here, new lows. Again, as I said, we were all correct on this one. Well done, guys. Most people out there did not correctly predict that this thing was going to continue to go down. But could we get to 88? Well, that's the new question. Investors, though, you haven't seen yield like this on treasuries for a long, long time. I've never seen in my trading career such a great yield off treasuries. It's a big deal in terms of where treasuries are at this stage. What about home builders? Yeah, this is weird and bad. If the weekly closes like this alert came on the plane. And I was like, whoa, there we go. Home builders is done. And at the same time, it was a sea of alerts. I think I got like 27 alerts or something coming through on the open on the previous session. The reason why is so many critical breaks occurred. We've got home builders here, often considered another canary for the markets, just getting super brutalized. And I'm just going to put AMD because I call that a canary as well. That's getting brutalized as well, closing near its lows. Rallies again could be met by sell demand, pushing down to that $90 territory for AMD. So again, it all kind of looks like there's maybe more to come, although I do expect some relief first. So we'll discuss that soon. Dollar index, look, it's in an upward trend. Biggest key thing here I can see is 20 moving average. 1 touch bounce, 2 touches bounce. So certainly a key level to be watching there. Gold, look, it's doing pretty good considering it broke up to 1945, hit into this resistance and sold. I did say that break looked long, and it longed, but then the yields were so much for it. So yeah, yields really pushed this thing back down. Unfortunately, with the fear of the unknown, which is where we are with yields, 2 year that is above this high level, gold doesn't tend to do very well in that period. But again, it could be pricing in stagflation. So I think gold's kind of hard right now. I'm still bullish on it on the medium long, which is probably a year, 2 years. But over here on gold, I think 1930 could be a bit of a problem for the bulls and the bears. They'll be fighting it out there. US oil, weekly is probably the one to watch here. You can see the long leg doji. Again, indecision at the peak. We got this one absolutely bang on. 92.50 was our targeting. And yeah, it went a little bit higher, 93.85. But let's be real, that's pretty damn serious and a very good level. Could oil go higher? Yes, it's possible, and we'll keep watching it. Stocks now, Amazon. We talked about the massive trades going on in Amazon. Then it led to a massive sell. It's probably around a level of demand at this stage, but that was a pretty brutal sell. 4.41% taken off. AAPL, the other canary, no new low. Keep your alerts under 172 or 171, 171.50-ish, because at that level, if we do go down there, we're probably seeing a 4,200 on the market, 41.50 after a break below that on Apple. So I think well worth paying attention to Apple over the next week. Along with that, Tesla coming into that 250 territory for the bulls. We saw Morgan Stanley's upgrade that pushed it higher, took it through this level. So I guess you've got to remain bullish on these zones in here. But 250 will be an interesting zone, psychological, key level of accumulation. We now know it was, so a zone to be watching. Semis look terrible, frankly. If we do end up getting this was a false move and we instantly rally back above it, then we'll know it's going to go into a monster squeeze. But at this point, it looks bad. It looks like rally is going to be met by sell demand. There's plenty of gaps still left on the side. We could be going back into this structure over here, and it looks like semis are leading the sell at this stage. So again, maybe not enough structure here on semis yet. Nvidia coming into demand, 400's a big level, could still be in distribution. We've talked about that for a while. AVGO has been kind of like the one that, and AMD that we've been pretty negative on. And AVGO opened up down and found that first level of demand. But again, we've been talking about this weakness or sideways for a long time while everyone's been trying to buy it. It just shows again that in these situations, when you get these huge pushes high, that often the hype is not real. US 2000, what's going on here? 1787. And that's not for investments, by the way. Of course, the hype's real on investments, but yeah, that's a long-term horizon. We're talking about current valuations. US 2000, 1787. It broke below these lows and just got smashed straight down. It could go lower too. I think it's like looking at 1745. And this is, again, another critical break. Along with home builders and semis and stuff, they're all pointing towards rallies being met by sell demand. NASDAQ's on a key critical zone. I can see why buyers would want to buy here. Big level there for the NASDAQ. So certainly I could see some reprieve. Same thing for the S&P. You can see 43.30. That was our target. Close on the lows, which usually means that rallies, even if it goes into the gap, are generally met by sell demand. So again, key level. And if we go to the US 500, you'll notice it went a little bit lower in the pre-market action, but there are some little structural zones, 43.88, 43.50-ish, kind of 56-ish. All of these zones might contain little sellers for the session. I think it's going to be, fast and nimble here. This is a big sell-off candle, probably could even go high and then go like this. But we do know the market's closed on their lows. So whatever this relief rally is, maybe it's more of a day trade, scalp kind of thing. Bitcoin, what's it doing? Well, Bitcoin fell back down to this level, failed to make a new low. So that's good for Bitcoin bulls, at least you're holding it. And it just shows you, again, being nimble at that 27.4 level that we talked about many, many times was probably key. Because even though the trend's up, if the rest of the market start falling, I think Bitcoin will be hit by it. In terms of news moving forward, we've got a little bit of information coming out here. We also have flash services, PMI, and everything like that. I hope you enjoyed today's video, guys. Make sure to subscribe. I know it's a little bit shorter than usual, but look, I got massive jet lag. I look forward to meeting a few of you here in Vegas over the next couple of days. And of course, if you're interested in getting an online ticket and watching it virtually because you couldn't make it to the actual physical event, then you can jump on over to fxevolution.com. That's fxevolution.com and buy the virtual ticket. We look forward to seeing you. It's going to be a great event, and thank you so much for the support as always. Smash that like button, guys, hit the alerts, and of course, subscribe as always. Bye for now.